Hello guys, I hope you had a good day. So let's start the review. If you see the first bar, it's a weak closing bull bar. The follow through bar was a doji bar again, then a strong bull bar, which is inside the range of the second bar, and the second bar's range is inside the range of the first bar. So inside pattern. And then we get one more bear bar closing here its low, on its low exactly, and it's also an inside bar. So you can sell one tick below this bar, place your stop loss one tick above the signal bar or on the entire day's high. So why would you sell this? If it's not clear to you on the 5-minute time frame, let's go to the 1-minute time frame. Huge gap up. The first bar was a strong closing bull bar, but no follow through. Base tried to take the price lower once, twice, and this is the third time. The second time, the closing was not so strong here. If you want, you can sell one tick below this bar's closing low price, place your stop loss here, and then hope for a major move down. That also worked out. So what is happening here? First push lower, second push lower, and this is the third push lower. So now this is a double top here, micro double top, also an inside pattern. And on 1-minute time frame, like I explained to you, it's acting as a triple top. So you can go one short, one tick lower this closing and place your stop loss here, or one tick over this the first bar's high. Traders who just want to scalp out, they could have exited here. Those who wanted to wait for a test of EMA, because this is a gap up and that will be the first magnet, they got their exits here. Now coming to the second trade of the day. 1, 2, 3. Price try to move higher once, try to move higher twice. This is the third time. So this is a wedge bottom. Although this is still a channel, it is acting as a wedge bottom. Why would I call it a wedge bottom? Although it's a bear channel, if you see, the huge gap opening is acting as the leg 1. So this here is a pullback and this here is a leg 2. Of course, you don't know what's going to happen here, but assume that we are somewhere here now. This was a huge breakout. This is the pullback to the EMA with 1, 2, 3 pushes lower. So this bear channel is acting as a bull flag. Why do I call it bull flag? Because the odds favor bulls more than the bears because of this breakout leg, the gap opening. So you can enter one tick above this high and place your stop loss one tick below the low of the signal bar or here. You can either swing trade or scalp trade this. It's your wish. I would get out the day's high or this junction at the inside bars apex, which is somewhere here. What do I mean by apex? If you draw this triangle and extend it, somewhere the meeting point is the apex of this inside bar pattern. Why is it important? It's important because price will usually retrace to that level and then it will decide where to head. That is why you see the pullback bar after 1, 2, 3, 5 closing, 5 strong closing bull bars, because people who entered here are taking their profits here, thinking that this might act as a resistance. We don't know if it will act as a resistance or a support, but we know that it's a magnet for now. So people will try to book profits either partially or fully. Few will exit at the day's high or for a scalp or a fixed 2-hour profits risk to reward. So now if you see leg 1 pullback, this was the start of the second leg. The second leg is subdivided into 2 more legs here, 1, and 2. For people who don't want to take this entry, they can see this as the breakout above this channel, bear channel, and this is the retest. So this entry will act as a major trend reversal. What do I mean by major trend reversal? There should be a prior trend. Here the prior trend is bear channel. The price should strongly break out above the prior trend or below the prior trend. Here, since it's a bear channel, the price should break out above the bear channel. We got a strong breakout, and then price should retrace to the channel and retest before heading higher if it's a bullish major trend reversal. What is the name? Major trend reversal. What is it reversing? The bear trend was the major trend till this point. Once it broke out above the channel, it is signifying that, hey, I'm gonna change my characteristics, you better watch out. So once it retests the previous lows, you can enter one tick above this bar's closing because it didn't trigger above this bar or this bar. This is where it triggered. You can get in here, and it's also an inside bar. Here, all major trend reversals should be traded like a swing trade only. You never scalp a major trend reversal because the odds of success varies from 30 to 40%. It is not a high probability trading setup. So you enter one tick above this bar, either place it below here or here or here. Some people place it all the way down here. I would rather place it down here because it's a proper swing pivot. And then you exit at your 2R, or if you want to swing it, this is where you exit. I'll explain why you will exit here. Okay. This was a major trend reversal. Leg 1, a micro pullback. Leg 2, and this turned out to be a reversal pattern. Suppose we are still here, and I draw this channel. You are able to see that it's a wedge. Price broke out or overshot the wedge high. This is acting as a wedge top. Then you got a reversal bar, bear reversal bar. People who are very aggressive or who know what to do with price action trading will enter one tick below this bar, placing their stop loss above this point. Now, there are many things which I have to explain here, but to keep it short, if there is any channel, suppose this is a bear channel, right? Here you see first point, second point, and this is the third point. But on the third point, you can see that there is a huge breakout, and the breakout is also breaking out of the channel trend line. So this is a bear channel overshoot. Suppose it broke out here on the upside, being a bear channel, I wouldn't call that overshoot. Bear channel is already heading lower, making lower high, lower lows. So if it does something extreme beyond the trend, which is already being in a lower high, lower low structure, it's breaking down on the lower side. That is extreme behavior. Why do I call it extreme behavior? Trend doesn't always last. If you go and count back the number of bars which are trending, it is usually 10 to 20, 15%. That means if you count 1000 bars, only 150 bars at most will be trend bars. The rest of the bars will end up being in a trading range or a channel or some kind of a wedge pattern. So that said, once it overshoots the channel, usually it will reverse within 5 bars. Here it reversed within 1, 2, 3. Third bar it reversed. So the same thing is happening here. This is a wedge channel, wedge top channel. Price tried to overshoot, and then it reversed on the second bar itself or the first bar itself after the breakout. So you can short hit one tick below this closing or low and place your stop loss one tick above this bar. Either you exit for a scalp at the wedge bottoms, wedge tops beginning or origin point, or you get out at the EMA, test of EMA. Okay, now why not short this huge bear bar? It's also closing below the EMA, but look at the trend. I told this is leg 1, micro pullback, leg 2, and a wedge top. Why did I call this micro pullback? There is only one bar which is acting as a pullback. There is not enough number of bars to be called as a pullback structure and a complete leg 2. So traders would rather see this as leg 1, this entire thing as a leg pullback leg, and this as the leg 2. Since this was a deep pullback, the leg 2 didn't go all the way high for a measure move. What do I mean by measure move? Suppose this is leg 1 and this should be the leg 2. But suppose we didn't get this huge breakout bar on the downside. Sorry. And somewhat a decent, we got a decent pullback structure here. Leg 1, pullback, leg 2. Then the measure move target would reach. Since this is a deep pullback, people who entered here on the long side, that is, would be facing so much pain. So what is their exit point? Usually, if you mark the entire bull leg, this is somewhere around the 50% region. Either they will enter one tick above the strong closing bull bar, which is also an inside bar, and if you see leg 1, micro pullback, leg 2. So this is a 2 leg correction to the 50% range, 50% mark of this entire bull leg. Why is 50% pullback important? It's important because usually traders will enter there hoping for a test of the recent high. If it breaks, if the breakout is very strong, then they will hope for a measure move higher. Now, why is this 50% again important? It's also important because those who entered here and are getting trapped in the on the long side, they will get a scaling point to exit at break even or for a small profit. Either they enter on limit orders or on stock market orders. I personally prefer the stock market order. If you want, you can enter on the limit order. So this was leg 1, pullback leg 2, and this bar, if you see, after this huge breakdown, this is a micro pullback, then this is an inside bar closing near its low. It's also below the EMA, so this is a good scalp down. You enter one tick below this bar's low, place your stop loss here and exit at 1 hour. Okay, why just a scalp and not a swing down all the way to the starting of the bull leg? 2 reasons. First one being, this is closer to the